Okay,
Very good.
amazing. Cool. Thank you so much to everyone who joined us today. Today we'll be going through a fireside chat with myself and Junaid first, and then we'll be handing over to Grant for a panel on consumer payment preferences. So let's get into it. So I'm not sure how many of you have seen our latest Stitch survey on cash payment preferences for consumers, but what we found is that cash transactions still represent an overwhelming majority. In our latest report, we found that South Africa's bank population surpasses 85%, but that cash still accounts for over 50% of the total value of all consumer transactions. Although digital payments innovation is taking place at an unprecedented rate, with significant benefits for consumers, cash somehow still remains king. Here at Stitch, we recently launched CashPay to offer even more choice for consumers in how they wish to pay and to enable businesses to reach those consumers that wouldn't have otherwise had access. Let's dive into this fireside chat with myself and Junaid, our president of Stitch, where we will explore CashPay and alternative payment methods. We will be taking questions in the last 10 minutes of our fireside chat, so feel free to pop them in the chat below and we'll definitely answer them towards the end. Okay, Junaid, let's get into it. Based on what we found about cash, why do you think cash is still such a prevalent payment method in South Africa today?
I can speculate, but I think the main kind of point that I took away from this was that we got to meet consumers where they are, regardless of the reasons, right? We can try to drive digitization, and digitization is happening as a natural phenomenon, but I don't think we are, nor our clients, in the business of predicting when and how these trends will play out precisely. I think we're all aligned that there is a long-term trend towards digitization and that we should all be ready for that and we should lean into that. But while there is still a cash economy, I think one needs to participate in it. So why does it exist? I think there's still many people that are still paid in cash. So it's about where is the source of funds. I think there is still a trust element to transacting in cash. There is still certain services that can only be purchased in cash, maybe your transport or maybe your local store, is still only transacting in cash. And then there's always like the fee element as well. So I think like many legitimate reasons why people are still transacting in cash and, very good reasons to change that and digitize that. But at the same time, those are long-term things and we need to respond to where consumers are, not just in trying to shape their behaviors to what we would prefer them to be.
Yeah, no, that makes complete sense. Like, I really liked your point about meeting consumers where they are. And I think so much of financial inclusion has been the digitization of payment methods. But I think just based on our studies and other studies in South Africa, cash is still very much prevalent. So it's all about enabling cash as a payment method today. And maybe in the future, it might diminish. But I think right now, if we want financial inclusion today, we really need to meet consumers where they are. And like we did see in our study as well that like certain consumers didn't have access to like specific industries because cash wasn't a payment method. And they went as far to say that if cash was a payment method, they probably would like want goods or value from that industry. So yeah, I really think the financial inclusion portion is really crucial with cash.
Yeah, I think that's right. I think there is like an ongoing merging of digital and physical worlds from a services perspective, right? And from a goods perspective. So, the first wave was like, oh, we all need to make everything digital. And then there was like, oh, omni-channel. And now there is like kind of like this physical, digital merged world. And everyone thinks about it in like the very abstract, like pie in the sky way, which is like, oh, the metaverse and AR and all of this. But there are more simple versions of that, which is like, just allow people to pay for online services in the real world or vice versa, or to fulfill in the real world and order online. And I think we still haven't completed all of those permutations. This is just one example of that merging of digital and physical, which is like, don't force consumers to pay digitally just because the service is digital. You should be able to have digital and physical building blocks that you can put together in many different ways for whatever the best consumer journey is for a different segment.
Yeah, that makes sense. And I think like ultimately it really comes down to whether a payment method like cash is conducive to a consumer's lifestyle. And if it's like what they're used to paying with, how do we facilitate that and innovate on that payment method? Which I think is what we've done with CashPay.
I think you're right. I think it's a lifestyle thing and a segment thing, but it's also a moment thing, right?
Yeah.
Because I think one of the traps we fall into is to think about consumers in a static way, like such and such a person belongs to such a profile. And we can, in a paragraph, describe everything about like how they will behave. But the reality is people are different people at different moments, right? Yes, I do a lot of online transactions, but sometimes I also go to the supermarket, right? And I might have forgotten to pay my bill at a particular month. And maybe today I want to pay it while I'm there, right? Rather than doing it when I go home, just so I can get it out of the way. So I think it's just about removing friction from people to be people and to do whatever it is they feel like doing at a particular point in time. It's kind of like bringing back a bit of that spontaneity and giving people options.
Yeah, that sounds perfect. I think when it comes to things like CashPay, what would you say CashPay as a payment method has benefits when compared with other payment methods such as instant EFT? But I think traditionally people would discredit or disregard cash like off the bat because there might be indirect and direct costs associated with it.
Yes.
But I feel like there actually are some benefits which are quite tangible with CashPay.
Yeah. I think one of the main barriers is obviously if you're a digital service provider and you don't have your own physical footprint, then undertaking collection of cash and all the logistics around cash management is obviously very onerous, right? And the cost of that, often wouldn't justify the benefit. I think the ecosystem has evolved to a point where you can outsource most of that now. And as long as you can create a good enough interface to your consumers, this can now become no different to you than a merchant, than any online payment method. You are really abstracted away from all the complexity of managing cash, right? Some of the ways that I think this might be better are, obviously growing your addressable market immediately. I mean, if 50% of transactions are in cash and one is not participating there, then that is a lot of consumers or a lot of transactions that are unaddressable to a particular service. So I think immediately the addressable market grows. Not only the addressable market grows, most probably it also grows in segments that were previously underpenetrated, right? Because the segments that tend to transact offline more heavily, I'm not going to say only because of the thing we discussed earlier, like different consumers can be different in different moments, but the people who tend to have a greater percentage of their transactions in cash are a different segment than those that usually have more of a greater percentage of their payments in online. So it's really like greater market addressability and also expanding into new customer types, right? I think it also allows one to like bundle in new and interesting ways, so how can your service fit into a new basket of goods that belong more in the physical world than only in the digital world? So I think there are like a lot of interesting like marketing options that open up with this, and a lot of new opportunities that arise from that.
Yeah, no, I fully agree there. I think from an engineering perspective, what really surprised me positively about CashPay was like the instant settlement and attribution portion of it. Like for those of you who don't know, but like if you deposit cash at an ATM or a retailer, we're able to instantly attribute value, and you're able to like get value and go about buying goods and services. And I think it's really remarkable being able to take a manual and very traditional channel and provide that digital value that Junaid was talking about. And I think it's been really awesome to see as clients have been integrating with CashPay, just the uptake with users and how there is that need and that demand for people who might not have been able to access cash as a channel before to be able to access those services. So really, really interesting exploration with CashPay, but looking forward to how the next few months of rollout go. Do you have anything to add on that, Junaid?
Yeah, just a couple of points to make. Like we talked about how it could be better, but I think it might be interesting to talk about like what are some of the things that people have traditionally thought cash was worse at than others other than cost, right? And like how some of that has been overcome, right? So you think about it, like some of the key things you need for an online payment method, right? So if we go through it, like traditionally cash is a problem because what about refunds, right? Like how will you manage that, right? How will you know who made this payment? How will I refund them? How do I know the person that is making the payment is the person who is supposed to be making the payment for industries that care about third-party deposits? How do I think about reconciliation and allocation? You talked about how we address that, but I think it's also important to talk about like how we've addressed verification and refunds, and that is now at par with kind of a direct deposit that you could do from your bank account, or at par with a credit card, in the sense that you can identify the user and at the same time provide refunds to that user through different channels. If they're banked, through a banking channel; if they're unbanked, also through a cash channel for the refund portion. So those three things have traditionally been, like, other than cost, those three things have been the three barriers to people adopting cash for online services. And now those barriers have kind of been eliminated.
Yeah, that makes complete sense. I think especially like the fear of third-party deposits is definitely something that we found when doing market research. And just from like a technical side, we, as Junaid mentioned, employed very similar solutions to what we've done with our instant EFT offerings to make sure that we can identify users who are depositing cash and kind of assign an identity to an otherwise anonymous flow. And therefore be able to refund them in the payment method of their choice, be it like a cash voucher or another solution. And then just in terms of like the integration of CashPay, how would this work in relation to existing Stitch ecosystem products such as Instant Pay and Link Pay?
Could you phrase that differently, Thalia?
So we currently have Instant Pay and Link Pay as products.
Yeah.
How do you foresee CashPay playing in the same space in them from an integration perspective?
Yeah, I think by breaking down these barriers in terms of the differences between the payment methods on features, like how they are reconciled, how they are allocated, the fact that they can be refunded, how we think about identity, it means that you can create a really standardized experience across all of these payment methods, right, from a user perspective, which then means that you can integrate it in a very seamless way into your checkout, right? So it will be no different than accepting an instant EFT or accepting a manual transfer from a bank account, because the consumer can expect a similar journey on the UI, as well as you can expect similar data and a similar flow from a merchant perspective. And then from a developer experience perspective, it's all available over one API. So you're technically also doing one integration. So that's kind of like the trifecta being taken care of there, in the sense of like, this is now no different than any other payment method in terms of not just technical integration, but business integration, as adding this as a payment method.
Yeah, that makes complete sense. I think that's been one of my favorite things about working on CashPay, is just that it looks and feels the same to the end user. And it really places the power in the user's hand to choose whichever payment method is most conducive to their lifestyle. And then, as you mentioned, on the engineering side, clients can just use the existing integrations, which is equally powerful because there's no more additional engineering effort required. And we're just really like providing that omni-channel solution that we've presented for financial inclusion. Cool. So I think we're at time almost for questions. So I thought before we get to questions, maybe we should touch on some alternative payment methods. So whilst all this great work's been happening on CashPay, our teams have also been really hard at work on the Pay Shop initiatives and other payment methods such as Capitec Pay. So if anyone missed it, just earlier this week on Monday, PayShop went live with 4 major banks. PayShop, which is our rapid payment, well, not our, but the bank serves rapid payment program, is South Africa's first instant interbank digital payment offering for low value payments. And BankServe was recorded as saying that they hope that PayShop could begin to displace cash from the economy. What are your thoughts on PayShop, and how do you envision it displacing cash?
Yeah, I don't envision it displacing cash. I think there is space for all of these payment methods, right? I think PayShop and Capitec Pay, which are similar initiatives by banks to make bank transfers kind of more accessible, especially for kind of the lower value payments, is very positive, right? We support that and, kind of like provide that to our clients as that is available, because it all comes down back to the point of consumer choice. We're not in the business of betting on different payment methods, and we believe neither should our merchants be, right? Payment methods come and go, they become more popular, less popular. What you want to make sure is that you're working with a payment platform, and we are providing payment methods which can be easily integrated, kind of look and feel the same to the consumer. And as consumer tastes and preferences change over time, we can adapt accordingly so that, sales and adoption of the actual underlying product is not hindered by not having or like focusing too much or too little on a particular payment method. So I think that the introduction of PayShop and Capitec Pay are very exciting, and they'll serve a particular use case very well, and they will live alongside other payment methods like instant EFT and cash and other bank transfer types as well. So I think more choice is better. One needs to just be careful about like how they integrate it and how they orchestrate their payments environment, so that these things are interchangeable and, kind of like integrated without too much business impact. And that's what we try to focus on when adding payment methods to our platform.
Okay, cool. Yeah, I think that makes complete sense. And I think like PayShop is a really exciting initiative, which just shows commitment by so many key financial institutions and players to really be committed to open banking and just like ensuring like that financial inclusion we spoke about earlier. I do think that it's still in its infancy, so I'm quite keen to see how it pans out over the next few months, and then also ensure that it integrates with other payment methods so that we can really start tackling those low value payments with fees that aren't like too high and don't necessarily make sense to the end user. And then, I guess the same holds for Capitec Pay. Like I was involved in the initial engineering of that from the Stitch integration side. And, it was just so great to have a set of first-class APIs from a bank that we were able to use and integrate with. And again, their clients can just utilize the existing Instant Pay and Link Pay integrations to also get Capitec Pay. And that again just shows that commitment by banks towards open banking, which I think Stitch has wanted for so long and really strive towards and help push the barrier towards. So that's really been awesome to see, even just from an engineering perspective. Cool.
We have a comment in the chat, Thalia, comment/question in the chat. Maybe I can just touch on that quickly. The question is, how does CashPay link customer identity to cash transactions? The answer to that is not straightforward because it differs per merchant implementation. Different merchants have different data points on their consumers as part of the sign up or checkout flow. When we're working with wallets, they have a full KYC on file. So there's a variety of data points to choose from. For example, when we're working with e-commerce merchants, maybe the checkout process is a bit lighter and it's more like a name, surname, phone number, etc. But the point is that CashPay has been designed to take whatever verified data points a merchant already has on a consumer and then use that verified data point as part of the checkout flow or the payment flow each time someone pays to generate some kind of a unique OTP per transaction. So someone would have to be in the flow to use CashPay every time on the app, generate a unique reference, and then only if they had that unique reference, which is linked to their identity, for example, through an OTP or something like that, we can link the transaction back to the person. It's a bit vague because it differs per merchant, but one very tangible example of this is like if you have a verified phone number on file, then we can use OTP to deliver the reference, and therefore only that person in possession of that number and that device can actually make that transaction. Otherwise, the transaction is unallocated and refunded without kind of like being attributed, without value being attributed. So in the case where it's a phone number, that's how it would work. But for merchants that have IDs or other forms of identification, we have alternative flows for that as well.
Cool. I think that was an excellent response. I see we've actually gotten a few more questions, so should we also try to take those? Jason asked, could you explain how recurring payments for subscription-based business models would work using PayShop, please? From a developer's perspective, how would integration work?
Yeah. So currently, recurring payments are not a feature of PayShop. PayShop in its current implementation is just for P2P payments at the moment. If you look at the future roadmap for it, though, RPP is a part of it, which is request for pay, request to pay, sorry, RTP, request to pay is one of the things on the roadmap. And essentially how that would work is you would create kind of a push to a user, they would accept it and acknowledge it, and then that would give you the right to pull money from their account. So it's very much like a debit check, but cheaper and more instant is kind of like the vision for how that would work. The integration would kind of like depend on the payment services provider. If one is going to use that on Stitch, it will be available kind of over our one API that we offer for all methods. We already have what we call our authorize and charge flow, where you can first link a mandate to a user and then create charges against that mandate. All payment methods that offer a recurring feature fit into that kind of pattern from an integration perspective, from a Stitch perspective. And that probably differs per PSP in terms of how they'll implement that.
Perfect. Thanks for answering that. I'll take the next two questions. So we have an anonymous attendee, which I guess would also be anonymous at the ATM, who's a frequent ATM depositor, and they find that the touch screen is a bit cumbersome and hard to capture the random reference. So yeah, CashPay does require a unique reference, and if that unique reference is not captured, we'll do an automatic refund to the user who deposited the cash. Because without the reference matching or matching to a certain threshold, we're unable to correctly identify the original transaction with what we're getting into our bank account to attribute to the end user or the end merchant. So yeah, that reference is key in this process. So that's why we do a combination of fuzzy matching and things like that to try and ensure that we can get it as close to right as possible. And then Ryan asked if it's possible to do a refund with CashPay, and is it also possible to request a payment from a user instead of doing a push payment to a user? So I'll take the first one. So yes, it is possible to do a refund with CashPay. I think with this kind of product, you have to build refunds into it just because there could be human errors when inputting the reference, or they could just be like the incorrect amount received and things like that. So we do anticipate a need for refunds, which is why we try to make them as automated as possible to lower the burden on the client. And then Junaid, the second part of the question is request a payment from a user instead of doing a push payment to a user.
Push payment to a user. I'll try and interpret that question as I maybe understand it. The way CashPay would work is kind of as an integral part of a checkout. So if one had, for example, a invoicing flow, where they invoice clients and they put a pay button on the invoice, for sure, you could have CashPay as one of the options on there, right? The way, that's definitely one way we foresaw it being used. And then also equally applicable if you had a checkout or deposit button kind of like in your app as well. So I think those are like the different types of flows of where this could fit in. This is obviously all the customer paying. So, there's no pull element here as such, but the way the payment is requested could be pull rather than user initiated.
Amazing. I see some of the other questions are quite developer focused. We will be holding like a specific developer Q&A over the next few weeks. So we'll definitely be in touch with more integration kind of questions. So definitely save those for then. And Charles asked, when can we see this for e-commerce? Charles, I'm assuming you're saying when can we see CashPay for e-commerce? Very, very soon. I think we're really looking at, allowing end users to buy goods with cash. And I think, like, I'm personally really excited for that, just because we're addressing a previously unaddressable market, and really hoping to aim for financial inclusion around e-commerce. Which I think is really important in a country like South Africa. Cool. And then we have a question saying, does CashPay accommodate clients without smartphones? Yes, we do accommodate clients without smartphones. You'd be able to either scan a barcode for the retailer channel, or you'd just be able to deposit at the ATM. So we could look at doing without the smartphone flow. Ideally, there would be an OTP, which we could either send to an email or a mobile number. And if either of those aren't available, it probably wouldn't work, because we do find verifying the user quite crucial to the flow. Perfect. We have 2 minutes left before the panel. Junaid, any final remarks from your side?
I don't have any more remarks. Thanks, Thalia.
Okay, perfect. Well, thanks so much everyone for joining us for this first part for the Fireside chat. I think we've gotten some really good insights from Junaid on CashPay and the other payment methods which Stitch is offering at the moment. And I really hope that you've gained some insights into how we're building things and why we're building things. I'll now hand over to Grant, who'll be moderating the next portion, which is the consumer payment preference panel. Over to you, Grant.
Awesome. Thanks so much, Thalia. Thanks so much, Junaid. I think it's been super encouraging to see the level of engagement so far. And things are only going to heat up now with the panel. So this should get interesting. Yeah, it'll be fantastic. So I want to give a little bit of context around what we're doing with this panel discussion. So this will run for the next 45 minutes or so. We will open up 15 minutes for Q&A, and we plan to finish at around 7:30 or so. So to give a little bit of context around the themes that we will be covering today, it's essentially trends in consumer payment preferences, cash payments, as well as digital payments. And I thought to share some of the insights that we had picked up, right? And just before going through like full introductions of everyone, but some of the insights that we had picked up through the report that we put out, right? So one, in the digital report, some of the insights that we saw is instant EFT is one of the fastest growing digital payment methods. And we found that 36% of people, these were the respondents on the report in the survey, preferred over any other method, right? 74% of people had used it. And those that used it cited benefits like speed, convenience, security. They trust that it'll get where it needs to go quite quickly, right? And that's from a payments perspective. Now, some of the surveying insights and results that we got from our cash report is of those that don't currently use products, such as like those requiring digital wallets, 58% indicated that they would look to consume products if they could pay for them in cash. There are some cash alternatives, and I think there's like many people on this call that will be familiar with vouchers, However, a lot of the respondents that we surveyed found that these actually gave a negative experience. So they would lose vouchers, there would be technical issues, and there would be like slight costs to either consumer or company, right? I think that's it's an interesting point, given some of the discussion that Junaid and Thalia had, just around how when you create relevance from a payments perspective, you're able to like increase that addressable market. And obviously cash plays like a really, really big role in South Africa. Some of the insights that we picked up from a digital perspective is that payments and the checkout experience really influences where people choose to shop. So 57% of consumers indicated that when it's easy and fast to pay, it would convince them to choose one online platform or app over another. So some of the priorities within that were really just like the ease and speed. And this means that a better payments experience is like a real differentiator for business. So I think that's like a perfect time to start to segue into like the panel specifically. And again, we'll cover 3 key themes. So consumer payments preferences, cash payments, and digital payments. I'm Grant James, Head of Business Development at Stitch. I would love it if each of the panelists could take 30 seconds or so to introduce themselves. We'll start in the following order. We'll go Miranda first, Saret, we'll go then David, as well as Greg. So Miranda, over to you just for a quick 30-second intro, please.
Awesome. Thanks so much. Hey, everyone. Great to be part of this discussion. I'm really looking forward to it. My name is Miranda Perumal. I'm based in Johannesburg in South Africa. I look after Visa's digital partnerships, fintech and venture strategy for sub-Saharan Africa. I've been in this role for a year and a bit and previously spent quite a chunk of my career at an issuer processor, or what we call back-end plumbers. So yeah, thank you, everybody.
Awesome. Thanks, Miranda. Saret, over to you.
Hi, everyone. I'm Saret Marais, and I am the Executive Head of Digital Enablement for Multichoice Group. So part of my portfolio is our self-service world, where we have a big priority around driving customers to pay their subscription accounts digitally. So this conversation is a topic that's very close to my heart. Look forward to it.
Awesome. Thanks so much, Saret. David?
Thanks, Grant. And yeah, good evening, everyone. Thanks so much for including Briter on this panel. So my name is David Saunders. I'm the Director of Strategy and Growth at Briter. But previous to joining Briter, I spent more than a decade in financial inclusion for a think tank based in South Africa, doing research on exactly this topic, which is what are the drivers of adoption in digital financial services. So I'm quite excited to be here to kind of merge the 2 areas of work that I've focused on, financial inclusion and now increasingly tech and fintech specifically. So thanks so much, Grant.
Awesome. Thanks so much, David. Greg, over to you.
Thanks, Grant. Yeah, great to be with all of you tonight. My name is Greg Walsh. I'm the Head of Fintech for Bash, which is South Africa's newest and greatest online shopping and lifestyle, got that all wrong. Online retail and fashion and lifestyle shopping destination. So yeah, hopefully the rest of my panel goes a little bit better than my intro, but looking forward to the conversation.
Your background is killer, Greg, so we absolutely love it. Lots of passion, lots of experience on the panel, and you are with South Africa's favorite moderator, Grant James. So let's get into it, right? Saret, I want to come to you first, right? And on this theme of consumer payments preferences, could you give like a little bit of insight to just discuss some of the drivers that you saw for the shifting payments preferences over the last few years? I mean, you guys do a ton of this work at Multichoice. You say this is a passion that is like near and dear, or a topic that is near and dear to your heart. Like, what are some of the key drivers that you saw in this space?
So, I mean, we are seeing, like I think everyone else, that customers are starting to show a preference for digital payments more and more. I would say the biggest catalyst over the last few years is that one that you expect me to mention, which is the COVID pandemic, right? But I think from a MultiChoice perspective, we were in an incredibly unique position at that time. So customers wanted pay TV subscriptions, because they were going to be at home during lockdown and there was no other way to pay for it than via a digital platform. So that certainly had like a huge impact. And I think we all know that once you get a customer to pay digitally once, it sticks. So in that first year of COVID, we saw about 100% increase in digital payments, and then followed by the subsequent, like the next year, by another 50%. So I think that was like, from a single event perspective, like quite an obvious one, but one that certainly had a big influence.
Yeah, I guess like COVID was this like a landmark time, right? People couldn't leave their homes. It was difficult to get out and actually make physical transactions. So everything like by necessity switched to digital, right? David, I want to come to you because you've done quite a body of research around this. And I know like when we're also preparing for this call, there were some interesting perspectives that you had around like the stickiness of digital and some of the trends that you saw there. But could you like largely speak to some of the impact of COVID and how this spurred like digital adoption and payments, and like specifically what you saw from a research perspective? And I think like as an add-on to that, like what's been the story of digital financial services adoption in South Africa, maybe as compared to other markets on the continent?
Yeah, thanks, Grant, and thanks, Saret, for setting up this discussion around the impact of COVID. So maybe just thinking about it slightly differently, less around COVID and maybe some of the underlying drivers that COVID pushed. I think what we've seen from our research at Sendfree was really that as soon as you make cash either more expensive or less valuable, you shift the potential towards digital financial services. I'm not sure if the underlying driver of COVID was more valuable digital financial services initially, although I think that's what happened. I suspect the initial driver was the lack of value that consumers could now get from cash, largely brought on by the restrictions in movement and the restrictions then in being able to access cash. And I think why I think this is really interesting is because when you look at where markets outside of South Africa have seen growth in digital financial services, say even before COVID-19, it was really in places where cash became less valuable or more expensive. So one of the biggest markets for mobile money in Africa is Zimbabwe with EcoCash. You might be surprised to find Zimbabwe is a very hard market to get cash. It's quite expensive. If you look at the initial kind of drivers and trigger around M-Pesa in Kenya, a big driver of that actually was the post-election violence in 2008, 2009, when individuals couldn't transit between Nairobi and Mombasa. And if that was actually a major gateway in which people physically put cash onto matatus and moved it between those areas. Because of the risk of violence, they no longer did this, and they started experimenting with M-Pesa, which at the time was designed for microcredit, actually as a way to transfer payments between these two cities. So I think what's really interesting about COVID was what it taught us about the relationship that individuals have with cash, and when you change certain aspects of that relationship, how it drives the adoption of almost drives the adoption of digital financial services. And maybe most recently where we've seen that post-COVID has actually been Nigeria. So they did a demonetization policy recently, and the result was as anybody that introduces demonetization policies, they're not very easy. You're replacing currency in the market. You create a lot of uncertainty. People have shifted towards mobile money, and you're seeing MTN Nigeria really doing well. So I think what really is interesting from COVID is I think it reaffirmed a lot of the insights that we had around this relationship between consumers and cash and the way that you can change certain incentives. Now, I obviously would have loved to see those incentives on the value side maybe and on the DF side and not cash, and maybe we can get into those a little bit later. But I do think they've been interesting opportunities for us to learn about this relationship and where digital financial services can improve upon it, mimic it, or leverage it.
I love the way that you say that cash almost had like a diminishing value, and that's what like spurred the move like away or into digital. So it wasn't that like digital provided like a ton of value or made sense to move. It was the fact that cash was invaluable at that point. Would love to like get more of a sense of that, but could come back to that. Miranda, I want to come to you quickly because I know that you've specifically been in the payment space for a while, right? You spoke about like working as like a cool backroom player. I think that was how you put it. But you spent time at Paymentology. You're at Visa now. You've seen a shift from like swiping cards to like tap to pay to card not present transactions. Like, what are some of the biggest shifts you've seen and largest drivers for the shifts across like the payments landscape, like from your perspective?
Yeah, thanks, Grant. I love this question, right? Because it just speaks to the journey that I've, experienced. I think it's very broad. I recall being in several meetings, where my ex-CEO would talk about the zip zap machine and how someone would take down your card number and let you sign like a piece of paper and that kind of thing. I mean, if you think about the different markets across Africa, with an exception of South Africa, because it's largely, very different in terms of what we're experiencing and what I've seen in terms of that evolution of payments. Initially here at home, it was, the ability to buy somebody a present, not actually, and give them freedom of choice on what they want through a gift card. Go into a shopping center, hand cash to the cashier, and they'll give you a plastic card and you can give that to somebody, and it's widely accepted wherever Visa or MasterCard was, right? That pivoted into some of the broader problems that we were trying to solve, right? And I think that has been a narrative that's followed me, through the different organizations that I've worked for is, how do we solve consumer and merchant needs? And the biggest way was, David, you touched on this with EcoCash in Zimbabwe. The example I'll use is Orange in Botswana. We saw an opportunity to say, okay, in a market that is, still emerging, there's a high number of unbanked and underserved customers here. But those customers, still leverage basic financial services through mobile money. So they will walk to an agent with their cash, deposit their cash to an agent, get a credit, allocated to a wallet or a stored value that they can access via USSD, and they can make specific payments. How do you broaden that? How do you widen that? And how do you give them more access and connect them to broader merchants, right? And that was when we went in and we linked a plastic card. And it's like, okay, cool. But, in order to use a plastic card, you need to have broad acceptance. You need to have an ecosystem that, your customers can pay at, or your customers are just going to, digitize their cash in a stored value, and then they're going to, withdraw it from an ATM. So it's like, why don't you look at a specific, segment of the market that is, still a consumer need, and shift some of that, some of that behaviors into e-commerce, which we at the time saw growing need across the region, by issuing virtual cards, right? And then it's, okay, we're giving, access to consumers that has a virtual card that's linked to a stored value or mobile money that now gives me the ability to spend online at a global merchant, which I could not previously do with my restricted mobile money options, right? And that continues to take off. It took off at the time, and it's still sort of rising with different variables, rising with it in parallel. And then something that shifted immediately after was like, hey, okay, cool. If I can get, funds allocated to a stored value that I can access on my mobile device, whether that's a smartphone or a feature phone through a stored value, I can get a card, but I can instantly create a virtual card that gives me the ability to spend almost immediately with transacting with a service. Why can't I just bring all of this into a single sort of channel or method, which is my mobile phone? Right? Often people say, if you leave home without your wallet, you won't turn back to get it. But if you leave home without your phone, you will turn back and get it. And that sparked, the discussion around digital third-party wallets. How do you pay and transact and merge all of those use cases into a single sort of digital channel? And we see the likes of Apple Pay, GPay, predominant payers, in South Africa today, still growing across Africa. And that sparks, our non-FI partners, the agile tech savvy guys saying, well, I don't want to rely on a third-party wallet whose devices are not in my country. I'll just do that myself. Plug in an SDK, you leverage technology, you're solving a need, and you become that party or that wallet yourself, right? And again, in parallel, specifically from a Visa perspective, we can issue cards until we are blue in the face. Blue, it's a pun. But anyway, what is the point if there is not a decent acceptance network? And this brings me back into South Africa, where it's like, yes, this is still more of a mature market. Yes, it's more of a banked market than some of the other emerging African countries, but there is still, a glaring need to scale acceptance that is low cost, ecosystem friendly, and that customers can access and use, but also that makes sense for merchant businesses. And I'm talking about micro merchants, nano merchants that consumers who transact in cash use, right? And to do that, or to help solve that problem, we deployed our tap to phone functionality in South Africa, which is essentially the ability to use your Android device to accept an open loop payment, which is a Visa or MasterCard or other. So over time, I would say net, there's been a big shift to, in specific markets, just getting the behavior from cash onto a physical card for specific use cases. There's been a further shift into e-commerce, online payments, again, to connect consumers to the ability to transact globally. And then there's been a further shift that says, we've got some digital savvy customers here that want to leverage, mobile devices for payments. How do we create this, ecosystem around it? And in all of those shifts, it's always been following, what are the changing dynamic consumer and merchant trends that we see.
It's so interesting to hear you speak, because I think, like, coming back to some of like the digital insights that I shared initially, and you speak about like consumer ease of payments, like one of like the key differentiators was a better payment experience, and like that was seen as like a real differentiator. I think, like, on this note, Greg, want to come to you on a question here, because Bash is essentially like moving from what was like very much like a retail environment into the online e-commerce space, and given like the very rich history and relationship that Bash and TFG have, right? So 2 questions, like, what are some of the key drivers that you've seen, and like what are some of the key drivers that you've seen, like, one, for or in this shift? And 2, what behaviors did you specifically see over COVID, right? And the pandemic period? Because again, people were restricted, physically could not move.
Yeah, perfect. Thanks, Grant. So for those of you who don't know, obviously Bash is part of the Foschini Retail Group. Foschini Retail Group has got over 3,500 physical stores within South Africa. I guess I want to preface my comments with thinking about 2 journeys that we've got. We've got a typical checkout journey, whether that's online or in store. And there's a bunch of things I can chat about there. And then we've got an account base for our credit customers, where effectively we're providing and granting credit to these customers, and they're having to pay off their account as well. So we've got 2 journeys, a checkout journey as well as this account payment journey that we've seen quite some dramatic changes in. Typically what's happened, and speaking to some of what Miranda said, what David was talking about, and also Saret, we've seen things that there's an adoption friction almost for any new payment method. There's a hesitance or a hurdle that customers and consumers need to overcome first before they experience the ease of use and the lack of friction of that new method. And once they've experienced it and it's proven to be a better method, customers will adopt that. So even in old-fashioned rails, the emergence of all of our customers using tap to pay, NFC, instead of swiping and dipping a card and doing the old PIN entry devices, there's been this massive uptick and surge in that experience. And even that relatively minor change in the user experience has just seen the adoption curve of NFC fly. But no underlying change in payment rails or anything really. In terms of what we saw from COVID specifically relating to our account payment journey was actually a bit of a scramble. We predominantly used our store network and relied on our store network for account payment mechanisms, because we've got cash management facilities, we've got payment acceptance facilities in those stores. And for the month of April, I think 2020, we had no stores. It was literally every single store was closed, and we couldn't accept any payments. So we had to scramble to create digital payment experiences. Now that has become so important to our TFG Financial Services company that they're desperate for us to make sure that that experience is even better. It allows for a better collection rate and ultimately gets customers back in the shopping position. So that journey and that experience has certainly reached a lot higher level of importance in our business than previously, where it was kind of out of sight, out of mind. It's the age-old thing in a retailer anyway, where people in their big white offices and at head office don't think about the realities of what's actually happening at store.
There's this really cool clip by Andreessen Horowitz, a VC fund, where they speak about how every business will become a fintech. And I think to an extent, you're seeing like the importance of like payments and like fintech, like services, or at least like from a priorities perspective, like play out. Or at least it sounds like it's playing out within like the Bash and TFG structure. David, I want to come to you because maybe to like link onto some of the points that you were mentioning around like the adoption curve, and really to just like round out this phase of like what's been driving like the adoption of digital. Like come to you to just add a comment on that.
Yeah, I really like, Greg, what you said there around this difference between what triggers the initial trial of the product versus what drives somebody to stay using the product. And I think what I wasn't saying initially, Grant, is that that digital financial services aren't valuable. What I meant is that how valuable cash is to consumers means that you sometimes need some extreme events to trigger a change. And what I'm really interested, because I suspect Greg, Saret, and Miranda know this much better than me, is what if those things stuck at the end of COVID-19? Like when cash and digital went back onto an even playing field, what were the behaviors amongst consumers that you saw stuck? Because that may give us insight into what the changing consumer preferences are over the longer term.
Can I dive in and give you
my go for it. Let's get some cross-panel discussion going.
Yeah, fantastic. So thanks for the question. So, I mean, definitely what we saw was this understanding and adoption of digital. I mean, that even though customers have largely returned to stores and we haven't seen that kind of accelerated growth curve, people still go back to, in South Africa anyway, they love their bricks and mortar experience in a retail shopping center environment. They still go back there, but their payment experience, they're far more willing to have as a digital experience than previously. So we see that, and we think that's one of the customer experiences that's changed. We think it's still an opportunity for even further growth. And before I derail the rest of the answers from the panel, I'll stop there. But I want to ask David a question in a couple of minutes' time.
Cool. Miranda, Saret, do you want to add comments on David's question?
Yeah, I mean, I think certainly what we saw, there were certainly customers who went back to paying cash, like that happened. But where we found that we were certainly shifting behavior in a fairly consistent and sustainable way was through the adoption of our self-service platforms. It's like once they realized that you can check your bill and do some other things there, which are important in our world, that piece of the behavior they stuck with, even if maybe sometimes they ended up making the payment through a cash channel again.
I'll just add a small comment around, maybe not from the consumer side, but from the merchant side. What we saw is that during COVID, some of the SMEs, or most of them were forced to get online, and they did that through different ways. And a lot of them did that through social media, right, and social. So purchase inside of an Instagram, for example. And what we found is that stuck, because the force that pushed them onto digital gave them additional information about those customers. And so they used that to create stickiness with the consumer. which is, oh, okay, this is what she bought. Cool. Let me send her some comms about it. Let me give her a discount on it. Let me create this small rewards and loyalty platforms, that would make a difference. And so I think the team's pretty much covered, from the consumer side, but we did see that, our SMEs put a lot of effort and a lot of work into the data points that would, re-attract customers to continue to use, digital platforms.
Awesome. Thanks for the commentary on that. I think we're going to move on to the next theme now, which is essentially cash payments, right? We've spoken quite a bit around or at least in the previous fireside chat as well, around the relevance of cash within the local environment. But Saret, I want to come to you first, because obviously at MultiChoice, you guys have a pretty wide spectrum of clients, right? And you have to really think about the relevance of the payment method that you're offering to your clients. So what role does cash continue to play in the payment space, and why? And then maybe you could use MultiChoice as an example.
I mean, I think today we've spoken a lot about the fact that cash is going to be an important part of our payment ecosystem for a very long time. And I actually love that a company like Stitch started with digital payment methods and then went, hey, we need to have a cash option as well, right? It just shows that even if you've got digital in mind first, cash is important on our continent. And if I have to use MultiChoice as an example for that, we're no different. In spite of the great growth that we've seen from a digital payments perspective, a very, very big percentage of our payment collections are still through cash. Now, that differs slightly in South Africa compared to the rest of the continent. So what we've done in SA is we have a big footprint through retailers. And I think bill payment through retailers in general is quite important in our market. And people sort of go to their local supermarket and they pay whatever bills they need to pay there. And it's become like a habit, because they're not just paying for maybe their pay TV subscription, they're paying for a number of things. And if you move into the rest of Africa, in the rest of the continent, cash payments are also obviously very prevalent. I mean, there are markets where we don't see a lot of cash payments. A market like Kenya is a great example of that, where mobile money has just overtaken that, and vast majority of payments are on some sort of a digital platform. But in general, across the continent, we still collect a lot of subscription payments through cash. There, it's less through retailer networks and more through agent networks. So where an actual human would be in your area and they would collect on MultiChoice's behalf and others. And so I think it's here to stay for a while still. I mean, we all hope for that day when we've banked everyone on the continent and everybody's using a digital payment method first. But we do have to be where our consumers
are. Yeah, it's I think you've given a bit of insight to the African dream, or at least our African dream, a really digitized continent. But we do know that cash still plays this really significant role. I think some of our data and surveys essentially says 52% of transactions in South Africa are still cash. And in light of this, right, David, how do you think, or at least how are businesses thinking about reaching those consumers who still pay in cash, right? You mentioned you did quite a deep body of research around this. What did the data say?
So before I jump into that, something that I think Saret said that's really, really interesting is around the cash infrastructure in South Africa. And I think in a way, this is both to the benefit and to the cost of digital financial services, because one of the biggest drivers of financial inclusion initially in the country was the ShopRite money market counter. And effectively what it did is it moved cash from the Western Cape back to the Eastern Cape, or increasingly over time to other provinces within the country. But an interesting thing within South Africa, maybe versus other markets, I think, Saret, like you may have been saying, is because cash is so readily available, and the businesses pay for that, by the way. So I don't know how long they want to reticulate cash through the ecosystem. So I'm not surprised they're being some of the ones to drive people off of it. But as long as that infrastructure is there, I think to the point you're saying, it's likely that there will be a hybrid model, because to the point I was saying earlier, cash still makes sense from a rational decision-making framework for a lot of people in South Africa, because that's how they start their lives. That's where they make the majority of their payments. So I think businesses, as they're thinking about this, let's say in South Africa, where potentially in Kenya, for example, where M-Pesa does seem to be as readily available as your identity number, it is one of those things where we have a different context. And that's what I also really loved about the CashPay product from Stitch, was rather than working against that momentum, you're working with it. So it's not, I think what we've seen with instant EFTs, for example, is that they've mimicked some of the value that people get from cash. They're instant, which is actually a huge thing for people that are living on the living paycheck to paycheck, so that they know what the impact of a bill is. I think the other side of things is that that instant and transparent. You can immediately see whether or not the payment is also settled. There's certain features amongst the instant EFT that almost mimics what people find valuable with cash. With what you've done with CashPay is you haven't mimicked cash, you've leveraged it. You've leveraged the behavior that people already do, and you've leveraged that behavior in a way that gives them access to a new service, like online shopping or online services. I think the third approach that businesses can take is that they can offer more value. And I think some of the comments, some of what maybe Saret was saying, some of what Greg was saying is that when you offer more value than cash, you really get people to stick with a product. And I think what you saw with merchants through COVID-19, what you saw with some multi-choice users as well, is that where you were able to improve on cash, giving people control into their finances. I'm not surprised, Saret, a major driver of people's behavior was to see their day-to-day accounts. Because if you're living paycheck to paycheck, you want control over those finances. I'm not surprised that merchants were some of the ones that wanted to stick with digital payments, because they then build a transaction history that gives them access to working capital or insurance. So businesses and fintechs in particular that are looking to reach consumers in the mass market, let's say, and drive financial inclusion, which is the reality, 90% of the market in Africa, you can really look at one of these three strategies. Can you improve on the cash offering? Which I think we're saying we're figuring out ways to do that. And I think the first one that really did this was payments over distance. So remittances, because it was literally much better for you to be able to send the money than to put it in a bus and to send it. And a weird way what COVID lockdowns did is they just made that distance anywhere, from a meter to 50 meters versus, from country to country. I think the second thing you can do is you can mimic it. What are the things that people value about cash? It's interoperable, it's instant, for example, it's accessible. What are these features that fintechs can think about that they can mimic in terms of what people value about it? And I've seen a lot of the innovations in digital financial services around this. And then the third thing I think businesses do is they can leverage cash. So you've seen a lot of fintechs that are coming in and underwriting stockvels, or insurtechs that have partnered with burial societies. So they're going out and they're looking at where are these or ATMs, where are these cash aggregation points, which they can leverage and work with in order to offer more value to consumers or businesses. So my advice to businesses and fintechs would be to understand what the value of cash is. That's your threshold, that's your competition, and look at how you can improve upon it, you can mimic it, or you can work with it. That would be some of the ideas and thinking I would have. And I think you guys have done a good job in looking at how you can do all three of those things as well in terms of the offerings that you're putting out there.
Thanks, David. Appreciate that. I think as you were speaking, it got me thinking about like a lot of the use cases for cash, right? And like Greg, want to ask you a question just around the role that you think you would see like a product like this or cash in general playing in an omni-channel experience, right?
Yeah, perfect. Well, I think the two things that immediately spring to mind, I guess, not so not as much a digital experience as an experience in our stores that I think are the drivers here. So a large portion of our online orders are click and collect orders. So roughly 40% of what we ship on our site ultimately ends up getting collected in a physical location, one of our store locations, by a customer. So the opportunity there to get into a new market and offer them a pay on delivery option. So we've done our own research, done our own surveying. Number one thing that customers are asking us for is a pay on delivery option. To do that in a physical store environment is obviously relatively easier than doing that in a delivered to home type scenario, particularly because the prevalence of payment points in our stores and ATMs and banks, et cetera, et cetera. So that would be a great opportunity for us to start expanding and looking at. And then I think the other side of it would be around thinking about that identity of customers. So roughly 25% of our checkout journey in our physical bricks and mortar stores is in cash. So from that perspective, is there an opportunity? The biggest value for us there would be able to say, we can link a cash purchase to all the other methods that we've got to link a customer identity up into something that we know about, and we can recognize this customer behavior. So for example, the other 75% of transactions are either using our credit, using our rewards card when they swipe that rewards card, et cetera, et cetera. So we're able to build up a picture of 75% of those transactions, but that remaining 25% has been a very, very difficult nut to crack. So we'd definitely be keen to explore that.
Yeah, I think like the cash and delivery one is like super interesting, like super interesting, because like my understanding of how cash and delivery currently works is that there's quite a bit that you as an e-commerce player would spend through like the journey or the value chain without receiving any value in return, right? So like the order is made, the order is shipped to a warehouse, the delivery goes out. If someone isn't there to collect the delivery, then those are all expenses that that you would essentially cover because you're waiting for that payment to take place. Yeah, that's a super interesting one. Miranda, coming
just
to
a
you.
quick point on that. Sorry, Grant, just to jump on in there. So we've just come out of a strategy session today where we were talking about this, and we were saying the opportunity for us is to have our products closer to customers, so you don't have to do that shipment. So can you offer a same-day collection service wherever's closest to the customer? Then there's no shipping cost. It's literally just, you know, on the way home via the taxi rank, you're stopping at one of our stores, and you're able to pick up that item and pay for it in your method of choice as well.
I think that's interesting because we spoke about from a payments perspective, getting closer to your customers, but you're saying like from a product perspective, getting like a lot closer to your customers too. That's cool. I'm gonna head to you, Miranda. So just understanding, right? We're speaking about cash quite a bit. What are some of the perceived benefits of cash payments that make it so persistent for even people with bank accounts? And maybe just like a follow-on to that, right? What can we as digital payments providers do to bring out solutions like closer to this experience?
Thanks for that. So I think perceived behaviors, and Junaid touched on it earlier in his Fireside. It's a trust factor, right? And it's just a way of transacting, a way of life. It's a habit and it's a behavior that is taken, you know, a layered approach to kind of adjust and change. You know, David touched on, you know, the value of a digital payment or a digital financial service or a digital offering. And, you know, my views on that is slightly from a different perspective, which is education, right? If I'm somebody, you know, in an emerging market in the middle of Africa, I don't have a smartphone. I'm going to have no cooking clue around, you know, what a digital payment means for me and how it will benefit my day-to-day life. Right now, cash is convenient. It's available. It's accessible. I'm not incurring costs, you know, and in order for me to transition out of this type of behavior, I need to actually understand a little bit more about broader financial literacy. What is a digital payment? What could this, contribute towards my life and my overall well-being, right? Because commerce is part of your life. You do it every single day, multiple times a day. You're transacting in different ways. And I think that's something that we really pay close attention to and focus on when we talk about, the shift from cash to non-cash, because that could be various factors in different markets. It's really on that financial education piece. And it's also on, a specific focus on the merchant base, that says, if your only acceptance method is cash and you face obstacles where your cost to acquire a non-cash transaction is too high, how do we come in and partner with you to solve that? But more so, how do you start to digitize your business even more that encourages a customer to shift their option when they get to you, to pay through a different method? So I would, it's a very broad question, but I think one of the most important factors for us is specifically, financial education, financial literacy, and showing the benefits and value of not using cash.
Okay. So I think with that, we're going to tie up the section on cash specifically and shift to digital payments, right? I think like digital payments, all an area that we're really well versed in as a group here. And Saret, coming to you first. I think the MultiChoice business is it's so interesting. We recapped on it yesterday, but it's something like 290 like payment integrations across the continent. But what do you generally see in how consumer demand is shifting, and what are the expectations that consumers have today when it comes to the payments experience, and how specifically at MultiChoice, like given like the breadth of your footprint, how are you working to meet those?
I mean, I think the first thing that is important to know is that the MultiChoice customer doesn't, like, our customers don't all sit in one segment, right? You've got somebody who's paying 30 Rand a month for DSTV, all the way up to somebody who's paying like 1,000 Rand a month for DSTV Premium. And so the way in which they want to approach payments of the subscription service is very, very, very different across our segments. And you mentioned the fact that we have over 290 payment integrations across the continent, and that is because we have to cater for customers who have a different expectation in terms of how they want to pay. And I think Junaid mentioned it earlier as well, like that point around like just be where your customers are. So we sort of look for payment methods that are very popular in a market, and then we'll integrate with it. Like, we don't try to limit it to you will only pay in this way because that's what's convenient for us. But when we start talking about how consumer demand has been shifting, it's also a very interesting story if you look at this from a continent perspective. So in a country like South Africa, debit orders used to be incredibly popular as a way to pay for subscription services. We're certainly seeing that customers are shifting away from that because they want to take the control back from a month-to-month basis and make that decision every month. In the rest of Africa, debit orders are not very popular, and they have never been. And if you look at a market like Kenya, wallets are incredibly popular, and in other countries in Africa as well. But then what I find fascinating is that as you come back into South Africa, wallets just haven't taken off here like they have done in other countries. So I think the demand is constantly shifting. I think we all have a responsibility to shift with the demand and go to where our customers want us to be. But it's not a clear-cut answer, because from country to country, it just looks completely different. And that's what makes payments in Africa such a fascinating topic.
Yeah, Africa is not a country. It's a continent, right? It's made up of like 52 different countries, and there's different cultures, like different ways of doing things. And I guess it makes your job very exciting, right? Miranda, right? So Visa obviously is one of the leading card networks globally, and one of the key components of a positive payments experience is the idea of making the process of paying invisible, right? So invisible payments as a concept, and making this possible for many consumers. Like today, we see a lot of innovative fintech businesses are leveraging embedded payments as a way of removing even more barriers in the payments process. And I just wanted to get your take on it. Like, how are you actually seeing this play out, right? And play out in South Africa, but also like from a global perspective. You can keep it to South Africa if global is just like way too broad, which it probably is.
Sorry, I was trying to unmute myself. Thanks. I think it's incredibly important for seamless, invisible back in rails, right? And it brings me back to my point earlier around education and, you know, providing efficient sort of payment methods for consumers to use. And if you just think about your life today, and I'll give you an example, there is one merchant, and I won't call it out, that still requires you to dip your card and put your PIN in South Africa, right? And for me, that was absolutely shocking. And when I found that out, I just left it and I walked out because one, I can't remember what my PIN is because I'm so accustomed to a certain way of transacting, which is on my phone. This is too complicated for me. I have to go into my app, you know, put my ID number in, get an OTP, look at the PIN, probably screenshot it because, you know, 2 seconds later I'll forget, you know, and it's just so inconvenient for me that I just don't want to use it. But if you give me something that, you know, like I said earlier, is accessible, it is cheap, gives me a hole-in-one experience, it's easy to use, and it solves my need, that is what I will thrive on. And that is what, as Visa, we thrive on, right? I laugh at some of my friends that still walk into Checkers to go do grocery shopping. I'm like, what the hell are you doing? You know, it's so much more convenient, you know, for specific things. In other areas, what consumers want is that trust element that cash brings. They want to feel, touch, see, so they can trust it. They know that it's secure. They know that it's reliable. And we, you know, through innovative technology and our offerings have to serve, you know, that segment of the market. But it's extremely critical, you know, from a global perspective, you know, the invisible transactions, but bringing different value and services and options into a single hub. And we see that, you know, through how super apps are playing out, both, you know, starting to ramp up in South Africa, but globally as well, because, you know, as we start to layer on these different value, you know, and services and options and methods to customers, they tend to, from our experience, want to see it in one place. And when they see it in one place, they will use that one place, but to access many different options. And they will be, you know, encouraged to keep on spending there and to drive that adoption and behavior across people that they know because they are being rewarded for it. They understand the value. It is a solution that works. And I can't stress that enough.
Yeah.
You know, often innovative, you know, sometimes it gets associated with complex. Yeah. And the less complex you can make something that is super complex in the background, the more that we have found massive uptake, you know, happens in market because consumers are like, wow, this has changed my life and it's really disrupted.
Yeah, I think like the whole concept of like doing the heavy lifting on behalf of clients or consumers is like, it's so important, right? You need to make it as easy as possible. I love what you said about like the paying with a physical card versus paying with a like at Apple Pay, Samsung Pay, or like a Google Pay. I can't tell you how many times that has caught me out where I'm like, oh my, I've completely forgotten what my PIN is. Yeah, I either have to ask a friend to pay the bill or sheepishly go and do a cashless withdrawal from an ATM, a cardless withdrawal from an ATM. So like next question, right? And would love to get like a hot take from you on this one, but like what's next in digital payments? So like, what are you seeing at a global stage that will shape the payments or shape payments in the next 5 years? And like, how does this relate to Africa and African markets? And quick one, David, I'm going to come to you with the same question straight afterwards. So I want to get your opinion on this. But Miranda, you're up first.
So I think 5 years is too broad. It's too dynamic, and I think it's going to be completely different to where we are now, right? But I think what we're really seeing is that, massive shift towards e-com. We're seeing a massive shift towards digital acceptance, not just your big merchants and big retailers, but your micro, nano merchants that are coming online. And we're also seeing the shift and change in currencies, right, in different ways. But one thing I would like to call out, that is maybe not directly, answering your question, but the shift in mindset across specifically the African central banks and regulators and the fintech ecosystem at large, in terms of, how they're shifting behaviors, how they're, further supporting sandboxes, open APIs for fintechs to connect to, participate, to disrupt the, the market as it stands, but also to serve the segment of the market that is either underserved or underbanked. And we're seeing the same thing with banks, right? Even though they do have banked customers, they do have products and services that they put out in the market. Some of them are just not efficient. And some of them are just not solving customer needs and merchant needs. And we're starting to see a shift and evolution of how some of our traditional financial institutes think about payments, get more of the customers that they don't access at the moment online, better support the merchants that they do onboard, but also partner with some of our non-FI ecosystem to do more than just issue a card and accept a payment. So I'm talking about things like lending, insurance, data-driven loyalty and rewards that creates stickiness, that creates a value and a larger full financial suite for a customer, combined with education. So that's where I'm seeing it more sort of shorter term, much shorter than 5 years, but we're seeing some of those kind of big shifts coming up.
Interesting. David, I'd love to get your take as well, right? Because you've also had like quite a big body of data just around like payments landscape, like cash specifically. Like, what does the back say, or what does our past say about like what's coming in the future?
And I've got my light next to me because we're currently being load shedded a bit, which is probably going to have some type of impact on the future of digital payments. But I actually think I largely agree with Miranda here. I think the trend that is going to have the biggest impact on digital financial services over the next half decade is regulation. One of the things that I would just listening to Saret, for example, ask, why don't we have e-wallets in South Africa like we have it, like there are in other countries in Africa? A big reason for that is because we don't have regulation that allows mobile-led financial services. You need to be bank-led within South Africa, which means that every fintech needs to find a bank which will sponsor them for their ability to participate in payments within South Africa. I think this is a barrier in a lot of ways to being able to grow your market, actually. And this is probably within one of the easiest licensing regimes, which is payments. Once you start getting into more complex products like credit or savings or insurance, I think it becomes even harder. I also think what we've seen as well with some of the regulations is that it's entrenched the monopolistic monopolistic kind of outcomes that we've seen from telecommunications companies in other countries and banks within South Africa. So I do think that regulators are catching up to this, and they're thinking about how do we create a marketplace that is more, or an environment that is more open, and where the best product that can best meet the needs of consumers or businesses is the one that rises to the top. And I think that a reason that this happened, and something that I would want us to reflect on, and particularly my space at Sendfree previously, was we fell under the allure of scale, and we fell under the allure of the venture capital world. And so what you've seen over the last 5 to 6 years from the likes of, the UNCDFs and the FSD Africas and these guys is a shift in focus from being more driven around how they can create a favorable regulatory environment and how they can generate consumer and business insights that can help fintechs and financial service providers generate meaningful products. And they got very excited in how can we mobilize funding for the next fintech to reach 1 million people at our let's say subsidized support. And I think we're going to see quite a big shift back from that, more into the regulatory environment and more into understanding what truly drives demand, not how do we drive investment into fintechs. So that's, I think, the major trend that I think we will see. And I think that is going to be incredibly impactful if regulators can catch up to this and create a space that really allows innovation and value to dictate with opportunities for consumers and businesses, and not what we've seen over the last, particularly over the last 2 years, which is those that have an entrenched position or those that have received the most amount of venture capital funding. And I probably just upset somebody somewhere around this, so I apologize for that. But I think it's a really important thing, because I think we got so focused on acceleration that we didn't release the brakes on innovation. And I think we're paying some of the consequences of that now, once we're on the other side of all the venture capital excitement.
Grant, I need to jump in and ask David a question. I've been dying to.
Go for it, Greg.
I mean, particularly in the context of South Africa, BankServe's approach to the way they've released PayShap. Again, it's entrenched in the hands of the banks. The catalyst for growth here, you spoke about some countries, it's demonetization, which is essentially a push legislative incentive to move people away from cash, versus other countries where it's a pull kind of mechanism. What do you think is going to be the catalyst to unlock PayShap in South Africa? And what needs to happen? What decision needs to happen in order to make that a reality?
And I think it's kind of similar to what I've said. If our objective is ubiquitous channels, ubiquitous instruments, consumers having the optimal choice to match services with what their specific need is, we need to be cautious against creating products or let's say participation in certain types of clearing and settlement schemes that actually exclude certain innovators. And I think this is going to be a really big challenge, because I don't think, for example, BankServe is out there trying to not create ubiquity for consumers. I think what they're out there to do is to say, the reality is that financial institutions may not be the most nimble and agile to be able to respond to innovation. So we're kind of seeing this kind of 2 steps forward, 1 step back. We saw it in Nigeria as well. They introduced an equivalent product called NIBS, the NIBS instant payment product. And that was exclusively allowed for banks. And it very much helped banks get on a front footing as the regulator allowed non-bank licenses. So I think we can be okay with BankServe and PayShap and allowing financial institutions the opportunity to innovate and have a pathway to compete at the consumer and business level. But that can't be the exclusion or disincentive of other markets. So it's not fair, for example, to just create a new space where they can play and compete, but that's still protected. We need to really open that up and allow everybody to compete on a similar playing field. And that may also require certain expectations from fintechs around things like KYC, around things like the amount of reserves that they have in place when needing to guarantee liquidity for larger payments. So that's what I think is going to be really, really critical to create this ubiquity for clients. And ultimately, we should all be in this together, because the cost of reticulating cash is hugely expensive. So if we can figure this out, it should actually be a win-win for everyone. I should probably stop there.
David, well, I've got like one question for you, right? Because like we're speaking about quite a bit, and like to bring it to payments, and like thinking about payment methods in the digital space specifically, right? What should businesses be prioritizing as like payment methods of choice in South Africa? I mean, we've spoken about cash. We've obviously spoken about card networks. We do see that instant EFT is one of the fastest growing methods in South Africa as well. Like, what are your thoughts on this space, and like what businesses should be prioritizing?
So in terms of I think what is really interesting, I'm not necessarily like the biggest necessarily crypto person, okay? So just cautious this. But one of the most interesting things I learned from crypto was they solved the store of value problem. And then all the payment use cases were like, let's figure it out, right? Because as soon as you figure out store of value, and you get people to actually put money on a digital instrument, it becomes a lot harder for them to move that money off of it, which means you can do a lot more stuff on it. And I think this was a little bit of like the point I wanted to think about that Miranda brought up. So Miranda speaking from her perspective, and she's saying it's super inconvenient for me not to have the most instantaneous digital payment option. And I agree with that. I'm one of those people as well. But then if I think about a consumer on the complete opposite side, it's incredibly inconvenient for them to make a digital payment if they store their value in cash. Because now I need to convert it into digital in order to make the cash. So only under extreme conditions is that actually going to be the case. For a lot of South Africans that look like me, we've just gotten people to use QR codes as a way to help us kind of manage this, right? That's not necessarily an alternative at the other end of the spectrum. So I think what's going to be a really important driver is not necessarily just where we find opportunities to get people to transact digitally, but how do we get them to store value digitally? Because once we do that, there can be a lot more interesting innovations that come out of it.
Yeah, completely agree. I think we are like a little bit over time. There's like one or two more questions that I would like to direct both at Saret as well as Greg. Miranda, I know if you need to hop, please do. It's been really good to have you. Saret, coming to you just for this this final question. How are teams thinking about choosing which payment method or options make sense for users? And what does this decision tree look like from like a criteria perspective? And maybe you could also like quote MultiChoice in, or at least like use your MultiChoice example. I know you were previously at the bank as well. So would love to get your perspective on this.
Yeah, I mean, I think like you would know from my previous answer that we don't really filter payment options at MultiChoice. We sort of go for whatever's popular. But I think like some of the key criteria is it obviously has to be like a safe and trusted payment method. That's the most important thing, because we always want our customers to feel safe when they're transacting digitally. We want to be where they are. Like, I think we've spoken about that. And then, and Miranda mentioned it earlier as well, like any payment method that does the heavy lifting for the customer helps us a lot. And I think, I mean, someone mentioned Capitec Pay earlier. That's a great example of where a bank gives us access to APIs that allows for that heavy lifting to happen between the merchant and the bank. And the customer doesn't have to worry about like, what is my customer number as a reference, or what is the amount I need to pay? And those kind of payment methods are going to become more and more popular in my mind. And that's really how we're going to make this shift from cash to digital, is if you just make it super, super simple. So
interesting. So I think like a lot of what I'm hearing as well is there needs to be like big support from the financial institutions in like helping foster this drive. But Greg, to you, right? How can e-commerce businesses really stand out in when we think about this like payments landscape, right? How can e-commerce businesses like specifically stand out in an increasingly competitive online environment? And like, what do you think are some of the key factors for influencing payment and purchase decisions?
Cool. Yeah, sure. So e-commerce, I mean, e-commerce is effectively a scale business. It only makes sense at scale. You've got costs that you just don't have in a brick and mortar business. So in order to scale, you need customers and products as the primary sort of foundations and building blocks. And then once you've got customers and products, and we're talking in the hundreds of thousands and millions in probably both of those scenarios, it's a reliable and repeatable experience. You can deliver what you promise, whether that's through your onboarding journey, through your discovery journey of finding products on site, ultimately through to checkout, payment and fulfillment of that product, and then reverse logistics. And so I think just echoing a little bit of what Saret spoke about, when we think about new payment methods in that journey, we're thinking about payment success percentage. A customer has just gone through a ton of friction to get items in their bag, to get through checkout, to log in, to register, to do all of these steps. And if they get to checkout and they can't check out, there's a problem. So payment success measures are something we look at very, very closely before we even consider a new method of integration. And then something that's critically important as well in an e-commerce business is a refund capability. So we've unfortunately learned the hard way that when you put in a payment method and you don't have an automated refund capability, there's a world of pain, not just for your customer who doesn't get their money back, but also for your operations teams. So we've got a pretty hard requirement. If there's no automated refund capability, we will definitely not be bringing that capability on board. And just to throw some shade at Capitec Pay, because they're getting a lot of praise today, they need to very quickly get us a refund capability so that we can not disappoint our customers. So yeah, we're very much looking forward to that capability coming our way. Yeah, sorry, I don't know if I answered the second part of your question,
Yeah,
but
I think that's fine. You do get refund functionality through Stitch, though. I just wanted to let you know. So one of the things that I think I just want to ask, like, all panelists as a closing question as we close out like this like digital payment piece, right? Is like, what makes a positive, or what are some of the factors factors or drivers that make up like both a positive and negative purchase or deposit experience, right? Like, would love to get like your takes on this, because it also speaks a lot to the experiences that you're looking to architect, or the environment that you're looking to create for customers that like step into your world. So maybe Saret, we could kick off with you. Greg, we'll come to you, and then David, we'll end off with you.
Let me talk about positive payment experience. In the pay TV world, the only experience people are looking for is for that payment to reflect instantly, so that they are reconnected to their viewing experience instantly. And any payment method that allows for that to happen makes for a positive checkout. And you know, I'll sort of leave it at that. I'll let the gentleman talk about the negative side of it.
Okay.
Spot on. I mean, it's positive is any experience that doesn't give me friction, that doesn't give me drop-off, error rates, etc., etc. And then we've spoken about what a great adoption curve looks like. You know, once you've gotten over that fear factor of using something for the first time, it just works. It's better than what I was using previously. I'm going to continue to use it. So it comes down to what that user experience is, you know, how you've designed it. There's so many options in terms of designing your customer journey in order to enhance that user experience. You know, I think for me, that goes beyond the method. It goes to how you're taking your customers through that journey that we need to ensure is great.
Yeah, I think that there's like, yeah, there's so much to be said about that, especially in like the e-commerce world, because it's so interesting. Like e-commerce shopping can at times be a stressful experience, and then you get to like a payments page where there's like tons of different payment options, and I think like what I've heard previously, some of the research says that can place like a cognitive load on users, like when they're at like a critical buying place. And I think like it's definitely like very interesting thinking about the payments experience within like an e-commerce environment, given like some of the complexities of like offering the best method, wanting to convert like the user on the method that they would like to use, but then also keeping like a very, very like sequenced experience.
So just quickly before David goes, we've just migrated a whole bunch of our traffic across to Bash recently in the last couple of weeks. I've been spending an inordinate amount of time looking at Hotjar recordings of the checkout experience and our Pay Now experience. And something as simple as a checkout flow, you think should be easy, like how many things can go wrong? And it's one of the most frustrating things ever, watching customers experience pain on your website. Because you've designed things, you've spent a huge amount of effort to get it to a point where you think it's ready for customers. And yeah, we've got some work to do in that space, which is, I guess, one of the disheartening things.
or exciting, right? It's like there's so much like fun stuff to do for you to like to correct this. David, I think like final take from you. So like, what makes a positive or negative purchase or deposit experience?
I feel like Greg is what makes a positive purchase experience. And I think what I'm encouraged by this conversation is just how on top of that experience Saret and Greg are. And I think my final point will be, I ultimately think if the biggest kind of driver that we can have in terms of creating value is not thinking that we're offering a service, but thinking that we're meeting a need. And I think that was what Saret said just so well. Someone is trying to watch television. Let's make it as easy as possible for them to do that. Someone is trying to buy a good. Let's make it as easy as possible to do that. So I think constantly orientating yourself around the need that is being met and not luring ourselves into the typical way of thinking, which is that we're selling a service, I think is really going to be the way that we design products that really create that value. And like I said, I'm encouraged by what Greg is saying and how on top he is of the consumer experience at checkout. And I think those are going to be the things that actually ultimately make the difference.
Awesome. Thanks so much. I think we're going to wrap it up there and end it there. I just want to say like a really big thanks to all of you as panelists. I appreciate the work that you do on a day-to-day basis. As well as your insights that were shared here. It was fantastic to tease out a few of these topics. I think for anyone listening or at least watching the recording, keep your eyes peeled and stitch. We have a big announcement coming on the 29th, which is exciting. And we will be having an event at our office, so like stay tuned. We will send everyone who participated in this webinar, or at least like tuned in, an invite as well. There'll be an in-person as well as online event, which will be super exciting. We won't be taking any more questions now, but if you do have any questions, please pop us an email and we will be sure to get back to you. So we're going to sign out now. Saret, David, Greg, thanks so much. Enjoy your evening, and everyone else, stay safe out there.
Thanks, Grant. Thanks, everyone.
Thank you so much. Bye-bye.
Thanks. Bye.